Is real estate the best protection against inflation? Hello all. I am not an economist, but I hear all the time that real estate is the best inflation hedge. Why is that the case, and is that true for any inflation rate, or is real estate useless if it hits 80, for example? I truly want to understand this and appreciate your time to help me. Thanks for your help. Commodities hedge inflation. While real estate will increase in value with inflation, it tends to not do well as an asset class during rising interest rate environment. Interest rate increases are the tool the Fed uses to fight inflation. Real estate with a low-interest fixed-rate mortgage is a great hedge against inflation. Inflation benefits you in the form of rising real estate prices, while the fixed-rate mortgage allows you to pay down today's debt with future inflated dollars. If the mortgage debt or interest rate increased over time, then it would be a wash. Paying low property taxes is key, or allowing the taxes to lower your federal state tax burden. Minimize or eliminate WA fees, which are only going to go up over time. You borrow money at a fixed sum like 3. You owe $100,000 and charge $5,000 a year rent. Inflation goes up to 5, your rent goes up by 5, and your cost to carry goes down by 5. As long as you can increase your rate to reflect new market rates, I can't do to rent control. You are able to increase income relative to your loss in purchasing power, while your debt doesn't shrink in dollar value, but it does in terms of real purchasing power. The benefit of real estate is leverage. You're getting full rent inflation on the entire home while you put a fraction down. Prices go up faster than you can save, then you win. Prices go down, you lose faster than you can bail yourself out. Long term, I'd rather own my own house than be a renter for life, subject to the whims of a corporation or shitty landlord. Real estate bleeds every year to property taxes and WA fees if applicable, so beware. Land, not condos. I would never use RE as a hedge against inflation. RE is bad for every investment purpose, including that. The people who say it's a good inflation hedge tend to also be the type to say that RE always goes up, and who invest based on hopes and dreams rather than data. According to historical data, stocks of companies that can raise prices for their products are actually the best hedges against inflation. They also tend to have by far better returns than RE does. They're not making any more of it. In a high inflation environment, you want assets. RE can be one of those assets. But there are other factors at play. If a major world economy hits 80 inflation, I'm not sure there's any safe haven. I don't necessarily think there's a best protection against it. But RE is pretty damn good. If you live in it, your expenses are frozen in place relative to what the current market is. This applies for your renters as well if it's a rental property. Historically, it has been one of the better hedges, assuming you don't dramatically overpay for the property, have no financing or reasonable rate long-term financing, and aren't forced to sell when prices are stressed. Rents in a typical market tend to rise in line with inflation, and values follow. So, historically, long-term, real estate generally has been a good inflation hedge. But buy too high, over-leverage, get into a situation where you're forced to sell at a suboptimal time. Lots of ways to lose money in real estate. Real estate as some kind of fund. Maybe. If you purchase a single house or condo, then your spread is none. If loud morons move in next door, the value of your investment goes down. Living in my mom's basement at 30 protects me from inflation. This concept of real estate being the best hedge against inflation was true until more recently. When the real estate market became massively inflated, you can ultimately decide why that is. But the prices you are sure to buy it today are not going to return to profitable within a reasonable amount of time. A correction is coming. Real estate can go down in the short term, e.g., when interest rates are rising like now, or the period from 1992, 1999. Over longer periods, I mean centuries, not just a couple of decades. The things that have exceeded inflation have been 1. Fine art, 2. Gold, 3. Real estate. Even through periods such as WW1, WW2, when invaders took over the land could still revert back to the original owners a decade later. We would now add 4. Bitcoin, as it serves the same purpose as gold, and is easier to hide, transport, etc. without the Nazis taking your gold coins. It's not really a protection against it, but rent is one of the highest expense on a budget, so not having to pay rent helps. Of course, you still need to pay for food, maintenance and whatnot, so those are still impacted by inflation. Arguably, a dividend-heavy portfolio based in consumer goods or defensive stocks would be best, as generally those are not particularly impacted by inflation, as they can just raise prices elastically. Land is inelastic. That's why we should tax it instead of a lot of other kind of taxes. No, bonds are the best protection against inflation. The problem with real estate is it has a cost of ownership, taxes, maintenance, etc. Who told you this? Until you renew your mortgage with rates up 30. No. Gold, gold, gold. In a vacuum, perhaps. But I would not want to touch this housing or commercial market with a 10-foot pole. Ideally, you'd want exposure to something like farmland. Every time I've bought a stock, it goes down in value. Every time I've bought a house, it goes up in value. Against regular 2 inflation, it is great. Against high inflation, no, as higher interest rates will collapse prices. Commodities are probably the best hedge, but I'm not that familiar with them. I don't see how they could generate much returns at all, though. Maybe tips. Sure, leverage someone else's financial misfortune to protect your own. 0 downsides. Know the thing with the highest stock to flow is the best hedge or asset to have. I'll let you explore what has that title, or soon will. There is no protection against inflation, it is what it is. Hushed face. Not right now, it's not. Unless you have cash to buy. Even then, residential housing is way overpriced. It is if it's not overvalued. Businesses are also a hedge against inflation. Companies with low leverage that sell products regularly would be a good bet. Depends when you sell. Property taxes are insane right now. Some states have double the amount paid in taxes cause of of home values. The Treasury sells tips. A Treasury inflation-protected security. It's indexed to inflation, and by definition there cannot be a better protection than that. Until the city simultaneously raises taxes 500 and then pleads for property owners to provide affordable housing. Get the F outta here. Philadelphia. Ben Felix has a video called The Best Inflation Hedge TLDR. There really isn't a good inflation hedge, but stocks are the best for the long run. Interest rates dictate this. It's not always best right now. Interest rates are high. Most people can't afford to buy homes now. Real estate is great during inflationary periods. Not only do you hold gain value from the appreciation, but also if you hold debt on the property you are going to be paying back with inflated dollars. No. Land is finite. Real estate has one massive advantage: leverage. So if bought well, in a good location, with good cash flow, it can be brilliant for growing past inflation. The key is, that does not apply for any random house you buy. Location and cash flow are key.